Good afternoon, everyone, and thank you for joining us today for the second part of our CUSO education series. For those of you who don't know me, I'm the Vice President of Marketing and Strategic Solutions, Chris Whalen, for Connecticut's Credit Unions and QVoyant. Connecticut's Credit Unions is the united voice and resource hub for credit unions across the state. We work alongside our member credit unions to strengthen their ability to serve people, businesses, and communities with integrity, innovation, and care. Cuvoyant is our solutions arm. We work with credit unions nationwide to help them see clearly, act decisively, and achieve what matters. We have a particular focus supporting medium and small size credit unions with a full suite of compliance services, consulting, and operational support. We're super excited to have the National Association of Credit Union Service Organizations, or NACUSO for short, here with us today. NACUSO is the leader of innovation, collaboration, and advocacy for CUSOs. A big thanks to Randy and the NACUSO team for partnering with us to put on this CUSO education series for credit unions. Today is part two, as I had said, of our three-part series, how to partner with CUSOs from vendor to strategic ally. Together, we'll explore how your credit unions can move beyond transactional vendor relationships and effectively engage with CUSOs as strategic partners that drive innovation, efficiency, and long-term value. We have a phenomenal panel of experts with us today. So, real quick, I'll do introductions. We've got Randy Salzer, the president and CEO of NACUSO. We've got Ron Arajo, the president of Mission Federal Services. This is a CUSO for Mission Fed Credit Union and has created several companies that generate steady revenue and enhance member service. And we've got Scott Dacus, the principal at One Washington Financial, whose investment fund is dedicated to early stage fintech CUSOs. With more than 25 years in credit unions, Scott has helped launch and start multiple CUSOs from the ground up. And both Ron and Scott are part of the investment committee with Circle. And Circle is a collective of credit unions and investors that are making larger scale investments into the fintech space and other players in support of credit unions. So thank you all for being with us today. And for the audience, we do encourage discussion and question in today's session. So please feel, if something comes up, please feel free to type something in the chat. We'll be monitoring that. Or please feel free to unmute your mic and we're eager to engage in a discussion. We've got a great panel, as I said. So with that said, I'll hand things over to you, Randy. Thank you.
And thanks for everyone for joining us. And hey, Ron and Scott are two kind of champions in this space. For those that don't know, my background was in property and casualty insurance for 15 years. And then I started in the credit union industry. And the thing I was most fascinated with was how much they share ideas, share collaborative thoughts, work together. And we don't do that in the insurance world. If anything, it's the opposite. So each year, I just am amazed by this. Then when I started in this role 6 months ago, it's more of the same. It's just like CUSOs are kind of that purest expression of this collaboration. These two gentlemen have I've known Ron for a long time. I met Scott when I got into this role, so it's just been more of the same. So I'm super happy to have them here today. They're going to share some ideas of really going from vendor to more partner and how do we go about doing that. So with that, I'm going to give you guys a chance to say hello and then we'll jump into the questions. Ron, we'll start with you.
Okay, great. Thank you. Thanks for having me. This is a great opportunity. It's a real passion for myself and Scott and others in this space to be able to, take solutions that are out there and either make investments and or actually utilize these services in a way to kind of better serve our member, but at the same time, really helping the industry sort of collectively with all the collaboration that we're doing. So yeah, I really appreciate this opportunity.
Excellent. Scott?
Yeah, it's great to be here. And we want technologists to come into our industry. We want them to stay. We want them to solve credit union problems. And we think that the CUSO structure is a way to do that. Apologies for my technical issues here. I'm running off a phone. I'm not in an interrogation cell. I feel like I'm getting the bare bulb, treatment. This is actually my office with no background. So happy to be here.
That's right. Thanks. Thank to you both. So let's start broadly and let's talk about what separates the true kind of strategic QSO partnership from a traditional vendor relationship. Either one of you guys can take that one.
Yeah, I'll take a shot at that, Scott. Um, I think first off, if the one thing interesting here about this CUSO space that we're talking about, this is not something you have to lobby the credit union, the NCUA for. You've already got this in Part 712 of the regs. It's been tried and true and tested and all that. So it's really there's it's not necessarily turnkey, but you have that part out of the way already, right? But when you think about everyone kind of defines partnership and strategic partner and vendor sort of differently. But from my perspective, one thing I look at is, we can all go out and find some, let's say it's a payment solution. We can find a canned solution out there that will meet, 70% of our needs. So are we willing to just provide to meet 70% of the needs of our members, right? Well, we can do better, right? We can do better by working with some of these startups and other providers in the space to say, where are you with respect to the credit union industry? And then how can you help me specifically and how can you pivot with me? Because the one thing that's different here, I think, is that a true, aligned partner that you have will be able to pivot themselves with you and with others in the space as well. So it's really just there's nothing really canned about it.
I think there's two tracks to this. One is that you can have a strategic partnership and not a vendor relationship with a non-CUSO. So a lot of the answers that we have today, I think would be relevant if you're trying to actually create a true partnership. The CUSO lens is really, I think, where you find additional value in the collaboration and also understanding what the shared goals are and the shared outcomes are, because you know that you're with other credit unions that are trying to solve that problem. So kind of with both of those lenses on, I would say that the other thing is you're not just like a transaction. You're not just consuming like the product from the fintech. Like they're actually helping you solve a strategic problem that you have. And so in that sense, it's about like opening up, being open about what your strategic plans are, what outcomes you're looking for, and then having a partner on the other side who's willing to build with you. So we use the design partnership as the phrase that we're looking for when we're working with CUSOs.
I like that. Both of you guys mentioned it, but it's about not just being a consumer of the product, it's a co-creator of it when you have a seat at the table from that QSO
Yes.
lens. Those
Yeah.
are great points. So what are some of the biggest mistakes credit unions make when evaluating or engaging with a QSO for the first time? Scott, we'll start with you on this.
I think the biggest mistake is that there's two, I think. One is just not having internal clarity about what you want out of the solution that you're looking for, right? And so not knowing what success looks like, not having a pathway to launch from a pilot to a full-fledged relationship. That's one, I think, mistake. But I think the other thing is, and this is different depending on which QSO you're talking about, but treating some of these companies like they're mature companies, when if they're earlier stage, they're not mature legacy vendors. That's why we like them. We have an opportunity to have some influence on the roadmap. We can partner, we can design, but then the rest of the credit union has to realize that they're not a mature organization, and so there's some things that need, I think, to be worked through when it comes to both the risk management and some of the operational pieces as well.
That's a great point, Scott. I think, again, having your internal team understand that, if you're comparing this partner to some other established partner out there, it's going to look like there's a really obvious choice. But when you weigh in the value of being able to shape the solution and work hand in hand with this partner to actually get somewhere where that's going to be even better, I think is really, really valuable. Now, there's a little bit more of a lift there from that standpoint. But I think that a theme that you'll hear probably coming up again here is really from a mistake standpoint, don't don't just make an investment and just wait for them to provide your product. It's really the whole point of this is to really make this a two-way street where you're engaged with your partner, they're engaged with you, and you're working collaboratively and collectively together to come up with a solution. Because if this isn't just sort of like, set it and forget it. It's going to involve, and that might sound a little scary, but we'll get to that kind of later in the conversation, I think.
That's a great point. It leads us right into like, so what are some of the signals that that you can either put in place or that tell you the credit union is ready to be a strong partner versus just a customer of the product?
Yeah. So I'll use Mission as an example here. So we had a change in CEO a couple years ago, and one of the things we did is we've said, okay, we really, really want to truly advance ourselves into this technology space. It's not that we had our toes in it, but we sort of like recognize that successful credit unions going forward will be technology companies that provide financial services. So that's kind of the premise we have. And then we looked internally at everything we had and said, what do we have as far as the big systems, the big core systems in mobile banking and phone systems and servicing platforms and origination platforms? What do we have in there that's going to best kind of serve us for the longer term? And that was a little bit of a grind. It was about, we're kind of at the tail end of it, but it was a good year and a half project of just getting these big systems up to where they need to be. So innovation was sort of like for some of the stuff that we're doing, that Scott and I do, which is really sort of these startups. It kind of relies a lot on a lot of these platforms, and so it was nice to get to that point. But it really gave us a good sense of what we have and what our capacity is here as well, going to agile training and things like that. So we have a really good sense of what we can actually do, and I think that process really helped to align everybody that this is the direction we're going to go, and it's going to involve like fresh, innovative technology.
Yeah, and I think it's worth probably calling out that Ron and I both have a particular bent towards the earlier stage fintech companies, and there's a ton of different ways of thinking about CUSOs. So it's not to ignore
Yeah.
the mortgage servicing and the insurance and all of those things, like because those are all under the CUSO umbrella. So try to like kind of hit both lanes if we can. But I would say like in general, this one of the signals is there an executive sponsor in the credit union who's willing to champion this
Yeah.
cause and can help move things along. That's a big signal for me. And then are they willing to share their strategic plan and share the outcomes that they're looking for, not just expect a demo and expect to see how the QSO performs. It's a two-way street, right? So you have to have conviction in the problem that you're trying to solve, and that the partner is the one that's going to help you get there.
It's super interesting. You think about you're actually aligning the mission of the credit union along with the QSO as well. So you have to do some internal project, like you talked about, Ron, and you as well, Scott, of are we ready for this? Which is that's another step that you don't often think about. You just look for a partner and say,
Yeah.
let's go, and say, well, are we actually ready for this Ferrari engine to be put in
Yeah.
this Ford chassis, right? Like it's a very interesting use case. So, on that, how should credit union leaders think about balancing that innovation and speed with risk management and operational discipline?
I think it's in small bites. Um,
Mhm.
I think we talk about the moving fast and breaking things, but that doesn't work as well in our highly regulated, conservative, low risk industry that we work in. So, really narrowing the scope, really trying to get a targeted pilot, having really clear success metrics up front, I think really help to take one step toward whatever that goal is. And if you can do it in a way that doesn't affect your entire membership and has a real small sort of impact if it doesn't go well, I think that's, to me, that we're just in that test and iterate, take small bites kind of mentality.
So Scott, when you think about, your not so much ROIs, but you think about the KPIs for some of these groups, I think like me, it's fair to say that it's good to have a plan, like when you're kind of just starting, but things are going to change, things are going to pivot. You're going to understand things. There might be better opportunities within that same organization. So you don't want to be as beholden to the typical working with more established vendors of here's the KPI, here's how many people have to be on your platform, here's what the revenue has to be. That's all really important, but you're part of the journey, and part of the journey is identifying other opportunities that might be as valuable and might be kind of ancillary to what you're doing. And we have examples of that, of course, as well.
Yep. Good point.
Yeah, it's super interesting because you guys both mentioned it earlier, but this QSO framework was built over 40 years ago, before the internet, before some of these
Yeah.
fintechs were even thought about. So now it's this next phase of banking and what it's going to turn into. And we believe that QSOs are a major piece of that. That's why all the work that Brian and I are doing on Capitol Hill matters, because we're trying to change some of those legacy numbers that are out there and kind of barriers that are there. So let's talk build versus buy. So a lot of credit unions struggle with prioritization and what the next steps are. How do you guys think about helping institutions determine which problems are best solved through a CUSO partnership versus building internally or buying something off the
Yeah.
shelf elsewhere?
Yeah, that's a good point. You touched on it a little bit earlier as well, Randy. When do you know that a credit union is ready, right? When
Yeah.
do you know if they're ready to actually go down this road? And that's part of the consideration. If you talk to IT, they say, we just need you to tell us what we're going to be working on. We will work on that. But keep in mind that if you decide that you want to build something on your own, you need to service that, right? That's the part that comes into play quite extensively here at Mission Cycles. You guys, this is what it's going to cost to service this kind of going forward. We're going to be the ones relying upon it. So are we better off? And do we have the technological curiosity to actually go on this journey with earlier startups or less established companies while we put this solution in play for us? So that just I don't know if there's a right or wrong answer, but what is your capacity to actually do this, right? And good example, a lot of most credit unions want to do RFPs when they come up with a solution, right? And you do an RFP. Weigh in the fact if you're doing an RFP and you have an investment in a company, you need to have a provision in it that says, we also have significant ownership of this company, so we can actually steer this the way it needs to be steered. It's classic to just sort of say, here's where they are today, and here's where they're going to say they're going to be in 3 years. But you can actually make that happen, right? By just having a seat at the table, having a seat on the board, you can actually make those things happen. And so it just needs to be a factor that you can consider about what you can actually do from an ownership position, or even just an investment position versus, you're just another client for one of these vendors.
Yeah. Yeah, I think the capacity question is huge, and it's the one that's probably got all of us wrapped up at times. Is the I've seen where we can build that, and how long will it take? It'll take us 2 years, and you're like, well, how in the world will have changed by then? So, I look at it and say, like, how important is it strategically to us, and is it a fast moving space? Another consideration might be, would if we, particularly if we're an investor, would this company benefit from having multiple credit unions' perspectives helping to design that roadmap? All of those things for me kind of lean towards the partnering in the CUSO side. If it's a commodity type service, I think those are ones that are easier to just go buy. And then it's kind of tricky in the middle of I think capacity with build. But I also think about, like, if it's something that's going to be very like core to your long-term differentiation strategy, maybe you are building that. But I think we put too much reliance personally on the build, and our abilities to do this work. As good as all of our teams are, when you start working with these founders for these technology firms in particular, you realize how much of a head start most of them have on your internal teams, right? And so,
Yeah.
like, catching up to that is difficult. So you might consider riding the wave instead.
Hey, Scott, I'd ask you a question. I don't know if we've talked about this, but I'd be curious. Have you found that your tech team likes working on newer stuff too? Like, you bring them a new idea
Oh
and
yeah,
it's not off the same core, it's not off the same mobile. It's like, well, this is actually kind of cool and new. I can get to actually do that. People get excited about it. Compliance even, and marketing's like, there's these cool solutions. I get to actually be a part of this. It's kind of fun.
yeah, yeah, for sure. I'm not sure compliance gets all excited about it, but all the rest of it sounds good.
They get less dissatisfied. We'll put it at
Right.
that.
Yeah, that's a good way to say it. But this is the interesting piece is this is what your members are expecting. Like, it's table stakes for us to be providing this, because or else they're
Yeah.
going to go get it from non-traditional banking institutions that are more than
Yeah.
willing to offer it up. So I know you guys have done a lot. I've been in this space for a long time, but can you share an example of a partnership that worked exceptionally well and maybe why it was successful?
Um, I'll go first, Scott. I think probably TAP is a good example for us that we're both investors. There's 7 large credits that have invested in a company called Tap Engine. It's a technology platform that gets in the brokerage space and wealth management space, and they're doing all kinds of things. And for me, it changed the way I look at investing, because what I found out was the key principles in this organization are extremely well connected, right? I think for the most part, credits that are doing what Scott and I do, you don't want to don't want to invest in somebody's first startup, right? It's nice to be on that third or fourth startup, so you know that they've actually had some experiences and looked at things along the way, right? And the the fact that the fact that there's a CUSO board, because in these corporations, Brian Lauer, who's on, creates his team creates these carve out subs where the credit unions can actually invest in that CUSO, which is ownership in the parent company. Um, that's like, I think, seven credit unions now, Scott, probably with, I don't know, 45, $50 billion total assets. And it's really designed to sort of let this company do what they do best, which is innovate. And since the initial investment, it's been, gosh, over 3 years by now, they've actually added two other lines of business, and they've been able to, and they're just on the cusp of some real great growth opportunities right now. That probably isn't possible in a more traditional structure where you've got a board and you've got to hit quarterly numbers and stuff like that. So again, the benefit of having that seat. Now that the songs still play, we'll see how it ends, but I think it's a really good example of a great start.
Yeah.
Yeah. Yeah, I agree. I think the one that comes to mind for me is probably silver. Um, for those that don't know silver, they're focused on the retirement aged members and the products and services that they need. When we first met them, we had my parent credit union, WSECU, had really targeted retirement services as the segment that they wanted to really spend some energy and attention on. And we know that Medicare webinars are our number one attended webinars. And so when we met Silver and Rian originally, the idea of having a platform that could help educate was really important to us. One of the things I think that has made it really successful is that she is really focused on the thing that she does, and she does well, and her team. When I say she, what her team does well. And as we started with her, maybe 6 months later, she came to us with like, if we're already giving advice about Medicare, maybe we should start a Medicare agency so we could do fulfillment. And two other credit unions, my partners at GISA Credit Union and Sound Credit Union, came to our headquarters, and we met with Rihanna and we penciled out what the Washington version of that looks like. And since then, it's like I see her drip on LinkedIn, and like every week she's adding a new owner, a new Medicare agency. She must have 10 credit unions, maybe more, that are now owners. And it's just being really, really focused on what she does and doing it and executing well. So that's one I'm really proud of.
I love that you mentioned that, Scott, the partnership you have with the other credit unions, Gisa and Maps and them. But I just think that's such a good story. Like
Yeah.
this is what we do, right? I kind of tell people sometimes credit unions, I say we're all just a franchise and there's no like parent company. So we can kind of like share information. It's kind of the part of the job as well. But I'm sure you've learned a lot through that process, Scott, as much as they have as well, just
Oh yeah.
looking at even something as specific as like a Medicare agency together.
Right, right. And it starts with what the credit union's strategic goals are. And so it's not right for everybody. And so like we have all, like I'll reach out to Ron on a regular basis. Hey, I'm looking at this company, I'm looking at this thing. It's not right for mission. So he passes. But like the fact that we've got these feedback channels and feedback loops for each
Yeah.
other, where we're all trying to help bring these ideas to life is, I think, a really, really cool thing. And the more that we can get to participate, the better I think we
Yeah.
all are. We can share capital risk, we can share strategic, like knowledge and wisdom on the roadmap, and we help boost these companies' initial, sort of the contract value and the ARR that they're looking for.
I love that. It's super interesting because you're, with all things being equal, your member would rather get it from your financial institution. They're only
Yeah.
going
That's right.
outside because they don't have the ability to do that.
Right.
Well,
Right.
on the
Right.
on the flip side of that, without naming names, what are some common like partnership breakdowns or maybe even warning signs that leaders should watch for early in a CUSO partnership?
I'll yield to Scott to go first on this.
I mean, the unfortunate thing is like we're dealing with, a lot of times early stage stuff, like things go wrong. And I always say like it's acceptable when the business model doesn't perform or work. It's not acceptable when it's something that we should have caught in our due diligence up front, right? And so we just work really hard to like eliminate the due diligence issues up front. You know, Controls are a big thing. I have dealt in other CUSOs long ago with, potential like fraud inside because controls, weren't good. Um, but I look at it and I say like if the credit union is ready to work with them, then like that, to me, that is the biggest kind of hiccup. It's less about like I mean, obviously like the business model has to work and there's a lot of unknowns to that. But I think what derails it the most is when we're not ready on the credit union side from an organizational change management perspective, from a risk and IT perspective. all of those things, our culture. We've got to like build our shops in a way that allow us to plug these things in and be successful. And again, back to some of the other points, having good executive sponsorship, having clear, success, clear metrics for what success looks like. Those are some of the things I think that are
Yeah.
needed.
That's a good question, Randy. I think in part because it highlights something that's kind of interesting here. You know, the typical thing is you hire a vendor and then they don't work out and you say they overpromised and underdeliver and you move on to the next one. In this case, you only overpromising and under-delivering because you're embedded with that organization. You're a piece of what they're doing, and so that result is your result as well. I would say early stage of stuff, and we've had our share of those as well. But I think early stage is kind of like make sure that the basics are covered. That don't just say, hey, they said they need this much money. What if they need a lot more than that? Like do that kind of work on your own as well to make sure, right? Because a lot of times you have personalities that are just like, I'm just gonna get the minimum that I can because I want to grow this business. I want to have ownership. Like, if they have to raise more cash, they should raise more cash, that kind of thing, right?
Yeah.
But also communicate to whoever I report to a board that's a partial carve out of the credit union board, and just make sure they're communicated along the way, right? So there's not all of a sudden one day they get this thing and say, "Oh no, that went belly up." It's like, "Wow, how'd that happen?" Like, just they will understand this, right? One advantage I think that maybe I have, I'm not sure if you do, Scott, but it is that we also have physical businesses in our CUSO as well. We have a car buying service, which is really the cash cow. We have PNC, we've got escrow. So we actually have some revenue generation from that standpoint. But it still kind of stinks, right? It's like, okay, this is still lost money here, right? So but I think that that's the ownership goes both ways.
Yeah. One of the presentations I loved a few weeks ago at our conference was Mark Zook from Maps when he walked through kind of his journey with CUSOs, and he's done as much as anybody, but the majority was, yeah, built this one, it failed, we weren't ready. Just like you said, Ross, like we weren't ready to
Yeah,
do it. It was a lot of that, and it was just this raw kind of go back through his life of CUSO investing, and it was super beneficial
that
to the
was
audience, though. It
that
was
was
really good.
really it was really really good. And congrats again on reimagination. That was a great conference, Randy. That
Thank you.
was the
Thank
board
you.
had took so many takeaways there.
That's great. That's great. Um, so we talked about this a little bit, but as technology continues to evolve at such a crazy pace, especially around AI and this fintech integration, how do you guys see the role of CUSOs changing over the next 3 to 5 years, or maybe 1 to 2 years with the speed?
Ooh, that's a good question. Off the cuff, I would say uh, CUSOs are really helping to provide access. And so in some well, let me just speak for like what I do at One Washington on behalf of WSECU. I really feel like part of that role is to be the scout team out in the field, seeing where technology is moving, where innovation is moving, and then bringing those solutions back into the credit union for introduction and for about quick evaluation in a way so that they don't have to. They're all very innovative people, but they're super busy with their operational, challenges. So I see the role of the CUSO as being, one that helps streamline that process and brings accessibility to WSECU. When we're making an investment in it, we're obviously then also providing access to the rest of the credit union space. And through our relationships with the CUSO and others, we're able to then like effectively advertise and help like showcase those technology companies like we did with the Thursday event at your conference. So I feel like maybe the answer, just again off the cuff, is I think CUSOs are going to be looked to more as a sourcing for like where, as opposed to being the ones to build those things inside of those four walls. Where I feel like that was how it was. There was a lot of like, we're going to build this out of our credit union in a CUSO. It might just be like we're the portal to get access to really great ideas, really great technology. But Ron, what do you think?
Yeah, I think that's a great point, Scott. The the other part of this, like the AI is the big one now, right? And so from my perspective, I would be really challenged to go to my credit union and say, hey, this is the AI solution you need for marketing regulation or something like that, right? Because I don't know who the winners are going to be, but I can put them in front of them and let them make those decisions, right? But something that I'm now thinking about your viewers here right now, thinking that this is a really pretty daunting task we're talking about if we want to get into this space. I won't speak for Scott, but I know I can speak for Scott in this case, that anyone who's viewing here, they have two people that they can feel free to reach out to anytime and talk about whatever they're doing.
Mhm.
There's a huge network of CUSO investors in this space, and we talk regularly about things. Scott, I think you're even kind of maybe taking another step with respect to, how can we share services and things like that internally. So it's
Right.
really just a crowdsourcing of thoughts to sort of get us to a point where, okay, we know everything we can about this. It's probably going to work for a little while. It may not work long term, but we know is everything we can about it, and that's kind of the best we can do. It's not just me by myself doing as much AI research as I can. I would get lost at that very quickly.
Right. Yeah. The other interesting piece is, I think one of you guys, if not both of you, mentioned earlier, there's still a very big impact made by the traditional CUSO model, which is commercial business lending, P&C, insurance, wealth management. This is just a newer evolution because of the fintechs that have come into the space, and your desire, like you mentioned earlier, Scott, to keep them in this space so that they don't go take 5 million or 50 million from JP Morgan just so they can put a moat around them and keep them out of credit unions and only in that bank space, right? So
Yeah.
I love the collaborative component of what you guys are both talking about. And I think that's a huge piece of where QSOs will go over the next 3 to 5 years.
Yeah, because we have a lot of things in common, right? And
Right.
let's go back to wealth tech, right? Right. Robo advising, fractional shares. So not people, probably anyone listening here, probably 2-3% of your members are utilizing whoever is providing your wealth services, LPL, Raymond James, Ameriprise, Cetera, whoever, right? But you have a big, giant chunk of members who don't have that kind of coin to actually start that off. And the identity, the problem we're trying to solve with that is, you've got 5-10% of your deposits that are, I've heard the term motelling. They're going to be in your institution for one day and they're going to get shot out to E-Trade or Robinhood or Coinbase or somewhere else. And so you can't really stop that with a high yield CD, right? That's not going to do anything for people. But if you can actually bring a service like that into your organization, and there are many providers out there doing this now, but if you can bring that into your organization, now you have a chance to really turn that tide a little bit, right? By giving them a space where that's safe for them, embedded in your mobile app, right? So it's really just thinking through, again, starting with the member and saying, how can we get more share of wallet here? What do they need? What are the needs? And then working collectively with others to actually make that happen.
Yeah, that's a great point. So, with just a few more here, but what advice would you guys give to smaller or mid-sized credit unions that may feel that they don't have the scale or resources to fully engage in these partnerships?
Well, and Ron, you mentioned it a minute ago. Like, reach out to people like Ron and I and others, Nicuso, others in this space. There's a ton of industry resources that are available to you. We'd be happy to help, honestly. And in fact, like Ron mentioned, we're exploring ways in which OWF can be a provider to credit unions of some of the basic services around partnering in this way. Our goal, ultimately, I think all of us, our goal is to bring the fintechs closer to the credit union industry so they understand what it takes to be a part of our industry, and then to help bring credit unions closer to the fintechs. And so we've got a gap that's there today. Like, one of those gaps might be your credit union's policies around investing, or
Mm.
around the risk appetite and risk framework for doing this. And if you haven't thought through those things, and maybe you haven't, I think, like, there are people who've done it already who can help you with those, with some of these, like the basic blocking and tackling that comes with this.
Yeah.
But then I think the other piece is just, don't get too overwhelmed with the idea that you have to, like, create innovation and be like, where you have to have all the ideas and it's got to have some central, like, innovation lab. Pick a problem that you have, and then go find someone in the QSO space who's trying to solve that problem, or find other credit unions that are trying collectively to solve that problem, and take a stab at it. Do one thing, do one pilot, and just get moving in that way. And I think you'll find that, once you get a small win or a small success, that will embolden you for more. And I think that'll also help, all the people around you who, like, have to make approvals and sign off on these things, feel good about you going on to number two and three, and so on and so
Yeah.
forth.
And another thing when Scott mentioned about trying to build out like sort of like shared services and things like that. One thing in particular I think about is the fact that we've got Part 712. Anyone can start participating in this if you're, capitalized enough to do this. But you might be thinking, okay, well, what happens when the NCUA comes in? Well, right now, not much. The NCUA doesn't look closely at CUSO stuff. They sort of say, you have a CUSO, what's the capital? They don't get into details here. But one thing that I would like to develop in collaboration with Scott and a bunch of others in this space is not so much a standardized due diligence process, but have something kind of loosely similar so that at a point when at some point the NCUA does say, okay, we're going to start looking at CUSOs more closely, we have this sort of like standardized script that says, here's all the things you're doing, here's all the contracts that have in place, here's where the money went, here's all that kind of thing, right? That's still in process, right? That's not out there. We all are taking a different approach to it, but it's similar. But I think that's something that would be really beneficial for smaller credit unions to just sort of weigh in on and provide their own input to as well.
Scott, you had to move around to get the lights going again, Scott.
I did. Did you see that? That was fun. I'm holding my phone with one hand, trying to keep it steady while it charges. It's a great morning.
Yeah, the technology is interesting. Yeah, and Ron, that's a great point. That's something that Brian and I have worked on as well with the NCUA of kind of hey, here's what to expect when you're expecting that NCUA visit,
Yeah,
so that it's not this, oh my gosh, the NCUA is here. What do we do now? It shouldn't
yeah.
be this intimidating process. It should be here's the things they're looking for. Let's work together to have that. So, last question. If you guys could leave this audience with one mindset shift or just a piece of advice about partnering with CUSOs, what would it be?
Um, I'll go first. Really begin, Scott mentioned this, begin with your members' needs. Where can you serve your member better? And are there solutions out there that can help you with that, right? If you have legacy systems that are in place, kind of know with enough time that this legacy system's not working out, or maybe here's some things you'd like to see them do, right? In other words, like what you're doing right now is probably pretty close to pretty darn good, and could just be used to kind of enhance that. But I would also say, I mean, just develop these partnerships and these networks and in with people that are like-minded that are doing these things that you're doing. Also, nobody is out there alone. I'm certainly not, and I don't think Scott is either.
Yeah.
Well, Randy asked for one thing, and you took two, and you took both my first and my backup answer on that one as you were going. So I'll just add to go buy Brian Lauer's book on everything about CUSOs, available on Amazon. And I mean, that's a great. I mean, I'm kidding, but not kidding, because like I give that book out a lot to people who've never been in the credit union space and I mean the CUSO space and want to understand what it's all about. So like just do some basic research on that. That's a good way to do it. And then, but yeah, just to echo the like reach out. This is a great part of the community, a great part of the industry, and it's a little bit of an like untapped, corner or untapped secret or whatever the perfect phrase is. So just reach out and like let make some connections, and I think you'll find it to be super valuable.
Yeah,
Yeah,
I don't know if we've ever said it publicly, but I know we've said it privately. This is like the funnest job in the credit union space.
that's right.
It really
And
is.
I'll just say to the audience, like I had a long list of folks as I was building out this curriculum with Chris and with Brian's help, and these two guys are the first two on my list. So I'm super thankful for them to say thank you and or to say yes. And so I'll say thank you and just give or reiterate that reach out to them. These two live and breathe this CUSO and credit union land. So you'll see that what they're saying about reaching out is completely true. And I'm happy to connect you or reach out to me. I'm happy to put you in touch with them. But thanks again, Chris. I'll turn it back over to you if see if you have any questions from the audience. If not, we'll get back to working.
Thank you. Thanks, Randy. Thanks, Ron. Thanks, Scott. Yeah, no, I don't see anything in the chat, but does anyone want to unmute? Does anyone have any questions specifically for the group? We've got a great panel here. I think, did I see someone unmute? No. I was curious, do you all have a best practice to share as it relates to collaboration, inter credit union collaboration? Sometimes you get big personalities from one credit union or another, and just curious at how you've dealt with that and if you have any best practices in that area.
Well, what
See,
if we
from
are the big personalities? I, I'm just kidding. I don't think anyone would describe me that way. But yeah, I think this is a relationship business, and so I think there's just energy and attention that has to be given to building relationships. And so I personally I go to like as many industry conferences that kind of relate to this work as I can, and try to find time with as many people as I can. And I take calls from virtually everybody. Like I have sort of a best practice in my own, like that I will take a meeting with you if unless there's like some unavoidable calendar thing, I'll take a meeting with founders, even if it's founders that I'm fairly certain that I'm not going to, be investing in, because I want to understand, I want to help, I want to bring them into the fold, et cetera. So I do that with a lot of credit unions as well. So one thing we didn't touch on, Randy, is that both Ron and I are running holding companies in the space, and
that's right.
not every credit union has a holding company. There's a lot of ventures or a lot of like divisions of credit unions that are doing this work, but it's inside the four walls of the credit union. And so I get calls a lot on why we're in a holding company as opposed to inside the credit union. And so all those types of things I think are part of that relationship building. So again, just reach out. Happy to walk through any of that with you.
Yeah, I think that's great. My advice would be just start the discussion. It's incredibly important.
I was just going to say to chime in just at the end here that, and these guys have mentioned it already, but I'll reiterate it. Don't forget the importance of the credit union space in all of this. So take the opportunity when you're talking to folks, not other credit unions per se, but when you're talking to technologists or whomever, make sure that you're explaining what's important, as Ron said earlier, to your membership, right? And making sure you're taking time to introduce them to what's valuable about the credit union space compared to just the banking space in general. Those are kinds of things that a lot, especially on the technology side, a lot of them are just not going to have that experience and that understanding. So, and that's your opportunity to do that. And sometimes that kind of a conversation really gets the technologist energized, like, oh, this sounds like a really cool space I want to be in,
That's a great
and
point. Yeah.
Yep.
Any final questions? All right. Well, thank you all so much. And I know Randy and all of I think Ron too mentioned Brian's book. And so in part one we discussed that feel free to reach out to me or Randy at the CUSO directly, and we're happy to get you a copy of that if you're looking
Yeah,
for it. But thank you all
definitely.
again so much for your time, and we're super excited to for part three coming up soon, and so we'll get some more communications out about that in the coming weeks. Awesome.
Thank you
Thank
all.
Bye,
you. Thank
everyone.
Have a
you,
great
everybody.
day.
Thank you.
Enjoy.